Hello, Mavericks. Welcome to the Market Roundup for Thursday, February 16th, 2023. So let's take a look at the market performance today. And you can see it was a down day pretty much all the way around. The Dow was down 1.25, S&P was down 1.4, NASDAQ was down 1.9. Russell actually held up in there okay, down 1%. Oil was down 0.2%, gold was down 0.75. Now, what caused this? If you were looking at the market today, it was looking to be a pretty decent day up until the last hour of trading. The wheels just fell off of everything. I mean, if you look at a 15-minute chart, there are some really long red candles on a 15-minute chart. Now, what caused this? Who knows? Obviously, more sellers than buyers. But the daily news that we got, the PPI exceeded estimates. It came in at plus 0.7% versus a plus 0.4% expectation. And the one that I think people are really starting to take a look at are the regional manufacturing numbers. The Philly Fed came in at a negative 24.3, and the expectation was negative 7.6. And I think these regional numbers are going to start to have a lot more significance right now, because what this picture paints, just a snapshot one day in time, is that inflation is exceeding expectations and economic activity is contracting. That is the definition of stagflation right here. And I think the market is kind of looking at that and going, oh, man, we really have no way to do this. The Fed is not going to be able to do a soft landing. And they've got to get a handle on inflation. We're going to have lower economic activity. It's just not a good look for anyone right now. So taking a look at this, here's a chart of the S&P 500 right now. And you see that long upper shadow right there on this day, on Thursday right now. Now, anything prior to this, we were just saying, hey, this is a pullback. And you look at it, it is just a very orderly pullback to about the 20-period moving average. And then we started to kind of claw our way back. So the question on everyone's mind right now, has this pullback failed? We can't be entirely bearish here. Okay, we're still at the 20-period moving average, I would say. We're above the 50. We've got some significant support, right there, at the 400 level. We've got it also at the about the 396 level at the 50-period moving average. You can't go and say, all right, I'm going to put my entire portfolio into bearish mode right now until we get confirmation. This could just as easily bounce off that 20-period moving average, find support someplace else, and go up. But that candle today makes me think that that's probably going to be I'd say a 30% chance. I think we do go a little bit lower. Looking at here at the NASDAQ, a little bit better picture right there. You still have that long upper shadow right there. We've got a little bit of time. We've got a little bit of space. We're right at 303. We've got the 20-period moving average right at 300. We're within 1% of that 20-period moving average. And the way the NASDAQ's been operating, the way every market's been operating right now, we could do that in a day. So I think it's going to be market close tomorrow is really going to set the tone for next week. Okay, are people going to have the intestinal fortitude to hold over the weekend? Is the risk reward for them to actually hold over the weekend, or is their risk reward better if they're to lighten up their positions? Okay, it's pretty strong support at that 300 level on the NASDAQ. We're going to take a look at and see what happens on Friday. Looking at the heat map right now, you can see there was a few islands of green, not a whole lot. Costco did pretty good. They're up 5%. Yeah, they did good. Humana, the rest of the healthcare plans didn't look good at all. Just those little bits of green out there, and a lot of stuff in the S&P, just nobody wanted to be around it right now. So taking a look at the market outlook, our outlook for this week has shifted to a 0. I'm going to call it at the 20-period moving average. We're above the 50. The 20-50 slope is still looking pretty good, but until I can get confirmation on whether or not we bounce off of a significant support level right here, I'm going to dial back the bullishness from a +2 to a +1 right now. Okay, it's just a little bit of caution right now. And if you want to be completely technical and say, well, hey, we're still above the 50. The slope looks pretty good. I'm going to go with a +2. That's fine. I'm going to wait to see where we hang out, or where we bounce from this. Because if that rally failed, it could fall apart fairly quickly. If it does, I'm happy to get back in on the short side. If we can claw back some gains tomorrow, then I'm happy to go back to the bullish side. In markets like this, I mean, we've been saying for a while here, it was in our 2022 year in review, we expect 2023 to be very choppy, very volatile, very back and forth. You know, these markets are very difficult to trade. So I think to tie this all up with a neat little bow on it, you can't be bearish, but you can be less bullish right now. I think that's the safest place to be. Start really looking at your portfolio allocations and make sure you're following that portfolio allocation chart that you put in your trading plan, so you don't get too far one way or the other right now. I think we're coming back into what very well could be a neutral market for the next couple of months. Let's take a look at some trades. So on the bullish side, we've got Spot, we've got Fox, we have KD and Uber, all are looking pretty good. Neutral trades, you know, XM, SCCO, BHP, and OKE. Those are all looking, fairly stagnant. You know, so if you want to put some butterflies on there, or a pretty weak bull put or bear call spread on there, you know, sell at the money, buy out of the money. You get a little theta on that one. The bearish trades, we're looking at ES, XEL, TWST, and Eli Lilly. So you can see right here, this is Spotify, and even though it was down 2.1% today. It's still in a nice high base. It hasn't broken through what was previous resistance. That looks to be like support right now. If we can catch a bid tomorrow or Monday, I think this is one that you should probably take a look at. It's obvious strength in a stagnating market right here. So this is one that's looking decently right there. But I definitely would wait for confirmation. Let's see if we can erase that long upper shadow on Spotify. Here's KD, same thing right here. We've got what's nearly a doji on today's candle right here. Give me one more up, try to get above that 17 area, and I think you've got a good trade from 17 to 18. You'll pull $1 out of it. We're not expecting a lot out of the bulls. We're not expecting a lot out of the bears right now. This is one that I think you could play for a chicken bull trade fairly easily. Going down here, this is XEL. This is one of the utilities. We're in this what was a low base, and I would say we broke below it today. We did have that a little bit of a lower shadow that put us up there, but it did get us decisively back in that range. So this is one that I would be taking a look at to go short. This might be one that depending on the candle that we highlight on the weekly trading room. This one is obviously showing some weakness. It's been stagnant for the past 3 months, and it looks like it's weakening from that stagnation. This is Eli Lilly. You can see this thing was in a bear rally, and that just failed. That actually pretty much failed Tuesday or yesterday on Wednesday. Long red candle right there. I mean, this was down another 2.2% right now. This one looks like it's blown through pretty much all support that it had about that 330 level. So I would be happy to play this down to 320 initially. If you want to play it a little longer term, you could probably go a little further. But this is one that I think is definitely a worthwhile trade to take a look at, see what tomorrow's candle looks like. So market outlook. Okay, we want to wait for confirmation that the pullback has failed. Okay, like I said, this is not the time to get bearish. This is just the time to get a little less bullish. Once we get confirmation that pullback has failed and we start to make new swing lows, then I think you can definitely shift to the bearish side right there. Remember that 50-period moving average. That's our line in the sand that says whether we're bullish or whether we're bearish. That's got a ways to go here. So this isn't a situation that I would be massively reallocating my portfolio this time. It's just time to dial back the bullishness. No economic reports tomorrow. Earnings are also pretty light. We've got Deere, we've got PPL and AN. Those are about the most influential ones that we're going to see. Other than John Deere, I don't see anything else that can potentially move the market. We'll wait to see where that goes. As always, thank you very much for attending, and good trading, everyone.